So, in real estate, we often hear about the traditional loan types of conventional and FHA loans to qualify for a home loan. But rarely do we hear or talk about another amazing loan that is available to home buyers that would allow you to put no money down for a down payment with 100% financing. And this loan type is called the USDA loan. Today, I'm going to give you the ins and outs of this fabulous loan called USDA loan and how you can qualify. My name is Cherilyn Williams, a local Chicagoland realtor, helping home buyers build their dreams through real estate. And I thank you for tuning into my video, and I hope you can take away some knowledge today to help you on your journey in becoming a new homeowner. And please click that like button and don't forget to subscribe to my channel anytime during the video or at the end of this video, because it will help other people who are on the path of becoming new homeowners. So the USDA loan is a mortgage loan backed by the U.S. Department of Agriculture under its Rural Development Program. This loan allows people to buy homes in rural and suburban areas. Now, when many of you think of rural, you're probably thinking you have to buy a home far out in the country with a lot of land and your neighbors are probably miles away from you. But that is not true. Some surrounding suburbs near big cities may also qualify for a USDA loan. Now, the USDA loan is for low to moderate income home buyers and lets you buy a home with no down payment, a lower mortgage insurance, and a lower interest rate, because the interest rates for a USDA loan are usually well below market interest rates, which is pretty incredible. Now, just because a down payment is not required doesn't mean you can't put a little money down if you choose. And actually, putting a little money down on the down payment can make you stand out and help you to get an even lower interest rate than what is offered with USDA. However, you don't have to put any money down if you don't want to. Now, this loan is often easier to qualify for than other options like a conventional and FHA loan. And to qualify for a USDA loan, your income must fall under the USDA limits, which we will touch on a little bit later, and the home must also be your primary residence. Now, with the USDA loan, there are two main types I want you to be aware of. You have the USDA guaranteed loan and the USDA direct loan. Let's talk about the most common of these two, and that would be the USDA guaranteed loan. This loan is for low to moderate income borrowers. And to apply for the guaranteed loan, you would apply with a lender like a bank or credit union that offers a USDA loan. So when you are searching for lenders, I want you to be sure that you check that the lender deals specifically with USDA loans. When you apply, the USDA guarantees the loan, which is why the mortgage interest rates can be competitive. This loan provides 100% financing and relaxed credit scores. The income limit is 115% of the median income of your county. Also, to qualify, your household income must fall within the local income limits, and the home must be an eligible rural area. The loan term for a guaranteed loan is for 30 years, just like a regular conventional and FHA loan. Now let's talk about the other USDA loan, which is the USDA direct loan. This loan is funded directly by the USDA, so you do not go through a bank or lender. And this is the key difference between the direct loan and the guaranteed loan. The direct loan is for very low income borrowers who want to buy, build, or fix up a home in a rural area. Direct loans require that a borrower's income must fall between 50 to 80% of the median income where you live. And what's really amazing is that the direct loan can offer USDA rates as low as 1% with payment assistance, along with a longer loan term of up to 38 years for very low income borrowers. So you have an additional 8 years to pay the home off, which can allow you to have smaller monthly mortgage payments over those 38 years. And this is because very low income borrowers may need more time to pay their loan off. Now, with this loan, the home price must fall under the local loan limit, which varies by region. from around $330,000 in most areas to over $700,000 in high-cost states like New York or California. Now, let's talk about how you can qualify for a USDA loan. The area where you buy must be eligible. So you can't buy a home just anywhere. The USDA defines an eligible area as having a population of 20,000 people or fewer. And the best way to find out if an area is eligible is to go directly to the USDA Rural Development website and click on eligibility, where they have a map of all the states, and you can check out the towns that are eligible near you and where you want to live. When using the map, you can enter a specific address or browse the map to see which locations qualify for both the USDA guaranteed and the USDA direct loans. I believe it's the areas shown in green that are eligible and the areas marked in black are not, but just check that to be sure. Now, the second requirement is that the home must be your primary residence. This loan cannot be used for investment properties or for second homes. The third requirement is that the home must meet all USDA minimum safety standards like structural integrity and access to utilities and services. The fourth requirement is that your household income cannot exceed 115% of the area median income to meet USDA income eligibility requirements. You must also demonstrate a stable and dependable income for at least 2 years before applying. For the USDA guaranteed loan that I mentioned earlier, which is a loan offered by a private bank or lender, your credit score should be at minimum a 640. And with the direct loan, which is the loan directly given by the USDA and not a lender, the credit requirement can be as low as a 580. So your credit score is a little bit more lenient with the direct loan, so keep that in mind. Now, the fifth requirement is that your monthly debt, including your future mortgage payments, should not exceed 41% of your gross monthly income, with exceptions based on your credit score and your cash reserves. And I did a video a couple of months back on how you can actually calculate your debt to income ratio to see if you can qualify for a home. So go check that video out. Now, what's really cool is if you have an excellent credit score and you have some money saved up, they may qualify you with a higher debt to income ratio, higher than that 41%. The last requirement is that you must be a U.S. citizen, a non-citizen national, or a qualified alien with a valid social security number. Now, what's great about the USDA loans are their interest rates. The USDA rates are among the lowest on the market, typically about 0.5% or 0.75% lower than market rates, and much lower than what you will find with a traditional, conventional, or FHA loan. But remember, your actual USDA loan rate will depend on your credit score and your debt to income ratio. So the better those two things are, the even better interest rate you can get. So I want to review a few key takeaways I want you to remember, and you need to really look at your specific financial situation to see if either the guaranteed loan or the direct loan, which both falls under the same umbrella but have different requirements, would work best for you. So here we go. The guaranteed loan, you can get approved by any USDA bank or credit union to start an application. With the direct loan, you have to apply directly through the USDA and not a lender. You can check the eligibility map on the USDA Rural Development website to see what towns meet the requirements. If you have a decent credit score at minimum of a 640 and you think that you could be approved by a lender, I say go for the guaranteed loan because it's less restrictive and easier to get qualified because you are not going through the USDA governmental agency. In contrast, if you go with the direct loan, it may be more time consuming and you may have to jump through more hoops and hurdles. And you can expect delays because you are applying directly through the governmental agency USDA, which may have also longer response times and wait times to get your application accepted. You also want to be sure that your income meets the specific eligibility requirements for whichever program you decide to choose. So as you can see, you need to think very carefully about your unique needs, and both the USDA guaranteed and the USDA direct loans take different approaches to helping home buyers. For additional guidance on USDA loans in the Chicagoland suburbs or towns, please contact me. I would be happy to give you advice on picking the right USDA loan for you. Thank you for watching.